There is no nobility in poverty. I have been a rich man and I have been a poor man, and I choose rich every fucking time. Because at least as a rich man, when I have to face my problems, I show up in the back of a limo wearing a $2,000 suit and a $40,000 gold fucking watch.
Yep.
Hello, traders. This is Jake from JakeTheStockGuy.com. You're listening to the Regular Investor Podcast. The Jake the Stock Guy podcast brought to you by, you guessed it, Jake the Stock Guy. We're a community of options traders, educators, moderators. We're here to help you get your edge in trading by interviewing the top traders in the industry, the top talent. So today we're going to be interviewing Dave.
Yeah, absolutely, man. So I grew up. I went in a rural America. That wasn't really exposed to the stock market. My parents or none of my family was involved. So I went to university, and when I was in university, I didn't know what I wanted to do, but I thought business school was interesting, and so I went in to pursue an accounting degree, and quickly learned after getting a little bit of experience outside of the classroom in accounting that was not what I wanted to do. And so then I was already in business school, and I was a risk taker. Growing up, I did a lot of adrenaline sports, snowboarding, motocross, things of that nature, and I liked the risk-taking aspect of finance. So switched my major, got into finance, and started to learn a little bit more about the markets, the way markets really function, from more of a theoretical perspective. And in business school, mostly across the board, fundamentals is taught, buy and hold strategies are taught, because they're trying to push people out to go into that industry of kind of financial services type thing. And for the masses, it makes sense for the buy and hold strategies. But for me, it wasn't something I was interested in. I read the Benjamin Graham's book, The Intelligent Investor. I did the discounted cash flow models, fundamental analysis, all that. And looking at the time horizon, I was like, I don't want to wait 10 years to make 20-30% and just roll in a 3 or 4% dividend. So the wheels began to turn during college, and then after I got out I had to find a job to make some money. I was dabbling a little bit of trading in college, because there was a club that I was involved in, an investing club. So I got some exposure to not only the theoretical aspect of markets, but more of the application of it, of actually trading and doing different things in the market with options and equities. So I had some practical exposure as well. But I didn't really want to go into the financial services, so I ended up doing consulting after I got out of school, saved up a little bit of money. And then I always had trading on my mind, so I was always looking at the market. I just couldn't set it down, and I was like, man, there has to be a way that I can make a living doing this. I don't want to just put a few $100s back and wait to retirement and sit in this cubicle. So I worked for 2 or 3 years, and I just, like I said, I was reading about it, and I was just trying to dabbling here and there. And then I ended up getting married. My wife, she had a business, and we had some savings. So assess the financial position. I don't need a big lifestyle. So it was looking at our finances and the business that she had, it was doing well. So it gave me the opportunity to kind of quit my job and just really dive headfirst into trading. And that's definitely not for everyone. And because if looking back on it, it would have made more sense for me to continue and to save money. But I think there is a lot of things that I've learned over the course of the past 4 years is when I quit. 4 years ago is when I quit my job and kind of started doing this full time. And 28.
Yep. How old are you, by the way?
Yep. So I quit. I had the opportunity. Okay. Like I said, I'm very fortunate for that. But I don't live I do not live a high roller lifestyle by any means. So it was I just need a little bit to cover the monthly expenses. So it was just really just diving into it, and I was very naive at first. I thought, I can make $100 a day, $150 a day, and it was just straight losing for 2 years, and I think that's the interesting part. Everyone starts with high hopes, and it's easy because there's very little barriers to entry. It's very appealing, and there's so much online, and so
you need all these Tim Sykes is a great example, right? He's a fake guru. He's like a millionaire penny stock trader. And I think a lot of people get into that because they're like, they know people make money in the stock market. Everybody knows that, and they think they can do it too. But these salesmen really is what they are. They're like they're really expert marketers and advertisers. They're not pro traders, because all the top pro, literally some of the top pro traders I know. This one guy, he has like millions and millions of dollars in his account he's trading with.
Absolutely, and I'll touch on that point. I fortunately had the collegiate background to understand how markets really functioned, and so I know a lot of people go into the market with exposure to some shady characters. But fortunately, I avoided that, so I never went down the penny stock route, which I think helped me in the long term. But it is a shame. There's a lot of great people out there that truly want to help, but then there's a lot of shady characters that can really, even if you do make it, you have to unlearn a lot of the stuff that you learn from this bad information that seems very attractive at first.
Like I was just thinking out actually. Ross Cameron of Warrior Trading is another guy. He's really big on YouTube. He's got like 1 million followers on YouTube, and he also has it. But he's actually, I think he's more authentic. I don't know if you're familiar with him, but being in the space, I kind of keep tabs on everybody and like all the top traders. And I'm an options trader. I don't trade penny stocks. I never bought a penny stock in my life. My introduction to the markets were, I had a friend of mine gift me $20,000 in Bitcoin in 2015, right? And then I didn't know anything right about technical analysis or trading, and I was up so much money in 2017, like traveling in Mexico. But I just was so naive. You can call it what you want, beginner's luck. And I just all those unrealized gains became very, very small unrealized gains. And and then I was like, okay, I had to sink my teeth into this, and I said, okay, this is there's something here, but I obviously I'm lacking certain data to make this consistent for myself, because I had a taste of the good life, man. I wasn't going back.
Absolutely.
I loved and I dabbled too. I dabbled in all kinds of different, like, I knew I wanted to make money online, and I didn't want to have to work for somebody. I wanted to travel. I wanted to work online, and I loved this idea, because honestly, Warren Buffett has talked about this in certain highlights on CNBC when he gets featured on there every now and again. To this day, he really thinks that like the world's just changing and moving so fast with technology and the evolution of technology, and everything's getting automated. And pretty soon, one day, there's not going to be anybody at Starbucks or McDonald's. It'll just be robots, right, serving you, because they'll figure out a way to do it. And so what do you do when you have this giant, about Elon Musk with the electric 18-wheelers, right? What are all the truck drivers going to do? So, and he talks about what's called a UBI, Universal Basic Income. And, he thinks that like there's just, I don't want to get too much into politics or anything, because we're talking about trading and your background, and we're going to get more into that. But, it's a cool idea. I think that one day, I don't know when, but I think that technology will reach the they call it, there's a word for it. I can't think of it off the top of my
Singularity.
head, but there's a word for like when the singularity, exactly.
Yep.
When technology reaches the singularity,
Yep.
because technology is exponentially growing, and we'll reach a state where there'll be quantum computing, and there'll just be call me crazy, but I think we will discover like a way to travel faster than the speed of light, and quantum computing and all this cool stuff. And I just don't think that like people will really have to work anymore. I think that we can automate our lives, and everything will be done online and on the internet. It'll be a weird future, but I think everybody will just kind of, it'll be a utopia, so to speak, a very utopian future. But then again, I'm an optimist. So if you're a pessimist, you probably think that World War III is coming and there's nuclear holocaust and all this stuff. So anyway, what I was trying to say was, excuse me for diverging so much.
Oh,
but
no problem.
I knew that I wanted to make this work online,
Yep.
making money online,
Absolutely.
and traveling. And I while I was in Mexico, I met a guy at a hotel, and he said, I helped him. He was trying to figure out how to open up a crypto wallet, and I don't dabble at all, guys, in crypto anymore. I think it's just, I don't know. I prefer the equities markets on the New York Stock Exchange. It's just something I've matured and grown. And if you want to play it, be my guest. But personally, I find much more enjoyment and consistency through trading options. And we'll get into what your style of trading is in just a minute, Davis. So kind of jumping around a little bit, but yeah. So I met a guy in a hotel. He told me he's like, I should introduce you to my friend Stefan in LA, and he's a German immigrant. He's I ended up moving to LA and living there for a while, and we met, and I was watching him trade options, trade the S&P, SPY, spiders, just scalping, day trading options. And I watched him for like a year do it. It took me a long time to like work my way into it, because I had already kind of got burnt in the crypto thing, and I was looking, the whole time I was watching him trade options, I was still trying to figure out, like I was trying to sell stuff on Amazon, I was trying to do the e-commerce thing, and it was just all so complicated, and it was so crowded, the space. And I had 2 failed ventures before really being like, let me dabble a little bit more in the options game. And I had some beginner's luck where I made, I'd scalped a spy call and made like 100% return on my $500 position in like 10 minutes. And I was like, this is more money than I ever made in like 3 days of working in the real world. And we'll get into that too. Like, I'm telling you, man, like people knew, how it's just total slavery in the real world. I'm like walking around on the street. I see these Mexican guys painting on the side of a wall, and they're in the hot sun in like Southern California in the summer. And I'm like, man, they work all day long, 8 to 10 hours, and they'll maybe make $150, $200.
Definitely. Yep.
It's just crazy. Isn't that crazy? Isn't that just the craziest thing? Once you get a taste of this world and you experience it, like, I don't aim high or shoot for the fences. Like, I keep a small account because I've learned that when I have a big account, I can't manage it too well psychologically. It's just my own personal mental thing, because I get sloppy, man. I have a big account. I want to take bigger positions, right? I want to like buy this, buy that, buy this and that and that. Instead, my biggest wins were always when I had a small account and I was focusing on like, okay, I got $1,000. Like, I have to be like a sniper. I got to be very precise because I've got a little bit of gunpowder.
Yep.
And I've got to make it work. You know what I'm saying? So yeah, my biggest returns and my biggest wins were always with small positions, and my biggest losses were always from having taken too big of position. And it was usually I'd have a real big win. I'd turn like maybe 2K into 12K or 2K into 20K. And then I would just immediately lose my freaking mind. And like the next day I would go all in 10, 15K, market order. And then I'd lose it all. It was like this was literally the loop I was stuck on for 2 years. 2 years, just, if you looked at like my trading in like a graph, it would just be like total roller coaster. It was either euphoria, I'm rich, or it was like I'm down to my last money. Man. And I've got to make this work. And but maybe we can start to kind of graduate into talk. Maybe you can talk a little bit about your journey with trading. I'm sure it's similar. It sounds similar. And then what were your big mistakes that you kind of kept doing? Because it seems like you kind of learned on your own through trial and error, which, by the way, if you guys are listening, is the best way to learn the markets. Maybe you can talk a little bit about your trading style. Like, what do you like to trade? Or you play the short side, the long side? Do you use margin, no margin? Maybe talk a little bit about that. Where have you kind of found your winning edge or your strategy in the market, Davis? And then, what were some of your big losses in the beginning? And then what set of rules did you create for yourself in order to mitigate that and really start to see that instead of those violent swings, those like steady.
Absolutely. Yeah. So my journey, like I said, it really started 4 years ago, and I wasn't really making any progress, and I'm still working out a lot of kinks. Like, I talk about it very openly on Twitter about losses and the psychology of trading, and that's what I really want to focus on, is the psychological aspect of my journey, because there's a lot of people that talk about the technicals, and I'll touch on that. But what I've realized over the past few years is that I never had any big massive wins, massive losses, because for me, like I said, I had an income stream, another income.
What did you first start out with, like when you were trading, for example? Like, what was your size?
I was just trading like $25,000, just a little over PDT, and I still don't even trade a big account. I just don't need. Like with options and the way I trade, I just and still I haven't really gotten. I like to get comfortable with my risk, and I keep it there, and then I'll slowly move it up. But I think that's for me. I never, when I first started out, I was never one to take big, massive swings. Like, I was just losing. It was just small losses all the time. And part of that was because, I was doing that full time, just jumped straight in. Like, had no idea what I was doing, just jumped straight in. And for me, it was more, I did not want to take the big losses because I knew that would put me back in my job very, very quickly, and I didn't want to go back to, a 9 to 5. So it was really, for me, it was just about preservation and not blowing up. So I learned a lot through that, because I got a lot of I learned a lot about risk management, and like I said, I never took huge wins, never took huge losses early on, just enough to stay in the game and start learning. For me, I've never been one that enjoyed or benefited from paper trading, so I was always just trading, one contract, a few shares, just to, get my have that attachment to the position. So I've traded the same. Oh, go ahead. Sorry.
Yeah, I mean. No, I was just going to say, a lot of people recommend paper trading, but it's not the same, guys. It's not real money psychology. Like, you might learn, like, I would say paper trading is only good for, like, learning and navigating your broker, whatever platform you use to trade on. I use Power E-Trade, but I know a lot of folks use TD Ameritrade, Thinkorswim, Webull.
Yeah.
Those are the top three. If you're trading on Robinhood, you guys, you need to wake up and smell the coffee because they're robbing you.
Yeah, it's I don't really have. For me, it's like, just getting in the game, staying in the game, and like I said, if you look at my Twitter, you'll be able to see the transparency. I'll post different things, like in January I had a really good month. In February, the first 2 weeks of February, I had I'm speaking about this year, which is 2022. I had the first 2 weeks of February were my best trading ever, and in one of the more difficult markets, right? But by the time February ended, I was marginally green. And you look at this and I do a lot of introspection and a lot of self-work because I believe that the technicals, and you could, I almost believe in random line theory, that you could just go and say that I'm gonna buy, let's say, options on Apple at $155.27, and if you manage your risk and have targets appropriately, I truly believe that you could you could do better than coming up with some kind of complex way of thinking about markets. And that was an aha moment for me, is if you were to just go and plot random lines and create like a simple system, like if it hits this level, then I will execute a position, and if it breaks 50 cents below, then I'll stop out. If it goes $1 above, then I'll start taking profits. If you do that, and I ran it in Excel, and I looked, and I'm like, hey, like this is, you get like almost like a 50% win rate doing this. And what that taught me was that it's not so much about the technicals. Once you get the basics down, it's really about your mind and about your management of your position. And this is something that I've only started to really comprehend and implement in my own trading over the past year. And it's been very transformative because I would have these very consistent runs where I would go 3-4 months of just consistent green days, and then all of a sudden I would give it back. And I'd look at this, and there was a lot of different psychological factors at play, a lot of different belief systems that came into these mistakes. And like I said, no technical is going to save you. No moving average, no support and resistance. Nothing is going to save you from those issues. So it doesn't get discussed a lot. It doesn't get discussed that No,
it doesn't. It actually never gets discussed.
Yeah, man. That's what I love. That's my wheelhouse. I love to tell people. I love to share losses. I think that sharing losses and sharing the struggles allows those struggles and losses not to have power over you. So for me, that has been through using Twitter, of sharing my ups and downs and being transparent. It humbles you, and it allows you to do a lot of introspective work, which is really what's going to develop you as a trader. So I'm happy to talk psychology all day, and because that's what I really love, and that's what I discuss a lot on Twitter.
Yeah, there's this one guy on YouTube I found that talks a lot about trading psychology, and he's good. He's like the only guy I've ever seen really talk on it. There's also that guy Mark. He wrote a book,
Mark Douglas,
Trading in the Zone.
Yes,
it's a famous book. So Mark Douglas. So there's Mark Douglas, and there's one other guy I've seen on YouTube, and their whole thing is just trading psychology.
Yep.
And that's all they talk about. And it's funny. There's only two guys out there really that I've seen anyway talking about it, and it's pretty much like the bulk of the work that you have to do to become a consistently profitable pro trader. By the way, I forgot to say one thing at the beginning of the podcast, guys. We are not financial advisors. Nothing we say or is a recommended buy or sell, and in no way, shape, or form is this investment advice. Invest at your own risk. Okay, I talked to a lawyer recently, and he was like, I said, hey, look at our company, look at the website, look at what I post, and look at what I do on YouTube. And he's like, look at the podcast, and he's like, well, you just need to at the beginning or end of all your YouTube videos or podcasts, you just need to say these few lines. And I'm kind of getting used into the habit of saying it. So thanks for letting me get that out there. But back to the psychology thing, I think it comes down to basically fear and greed. And for me, like I said earlier, position sizes, they need to be consistent. Well, guys, I will beat this into your head until your brains explode all over the carpet. You have to keep the same position size every single trade. I don't care how many days you're green. I don't care how many days you're red. If it's 500, make it 500. If it's 1,000, make it 1,000. But you can't buy. You'll never get anywhere trading if you can't keep consistency in your position sizes. And I'm going to tell you why right now.
That's
Davis
right, buddy.
is going to back me up on this, right, brother? If you take a trade on Monday with a $500 position and say you're right for 100% return on your premiums, so $500 profit for simple math. Tuesday, you take one trade. Tuesday, the next day, you take another trade. This time, you're in a $1,500 position. Okay, maybe you got some confidence. Maybe you got a little cocky with your 100% return on Monday. On that Tuesday, you lose, 50%. That's a $750 loss. Now you had 100% return on Monday and a 50% loss on Tuesday, and you're still negative. You're red $250. You can never get anywhere, guys, anywhere. And I learned this the hard way. I learned this the hard way. So if you have a $500 position on Monday, 100% return, and a $500 position on Tuesday with a 50% stop loss, and say you stopped out, you're still green, even though
absolutely.
You get it. You get it. 50. So I see this so much. It just pains me, because I had a guy write me the other day. He's like, man, that trade we took Monday. Or Tuesday, it was yesterday. I took a trade yesterday. It was a CRM, Salesforce. They had earnings. They were an earnings winner. Everything was good. But for whatever reason, they sold off in the morning, and it sold off to like my trend line. I had a really nice trend line. It looked like perfect textbook support for me. I bought so many times off that trend line. And it reversed, or that was the bottom, intraday bottom, and then I sold into resistance, which is the either pre-market high as a resistance, and then whatever the next natural areas of resistance are based on historical price action. But for whatever reason that day, it just cut through that support like butter, and it went like another $10 or another $5 down from like 210 another $10 down from like 210 all the way to almost 200, like 203, 204. Okay, and I didn't on that day. I did not respect my stop loss, because look, guys, even the pros make mistakes, and pain is not there to punish you. Pain is only there to move you to change, right? It's trying to teach you that something is wrong. You go back to the drawing board and correct it. And you may correct it for a couple days, and then all of a sudden you fall off the horsey again. You fall off the bicycle. Just dust yourself off, get back on, and make these things a habit. Just like waking up and brushing your teeth. Make that 50% stop loss like a habit. Never, ever, I don't care, how good you are, how good you think you are. You have to have, just like there's rules of the road and there's a rule of law, there's rules to trading, and you have to obey them every single day if you expect to do this professionally, and if you expect to do this long term.
Yeah, I mean,
you want to add on that, Davis?
For me, it's like I said, I've made, and I still make mistakes. Like, I have no problems. Like last year, my active trading count, I was red, and my my position account was green, and saved my trades. And looking back on that last year, you can pinpoint a lot of for me the mistakes back to a few things, and one of those being position sizing. And for me, it was you go on a nice win streak, or you get and it's, let me back up here. These issues matter more on the active trading basis, because you're making these decisions so quickly. So, for instance, I like to trade SPY options, and I could be in and out of position in just a few minutes, and it's very difficult if you don't have a systematic way to manage your risk and manage your position sizing. It can be left up for interpretation, and like what you were saying is, you hop into a position one day with 5 contracts, the next day you're at 15, and everything is totally different. And again, that is all brought on by psychology. That's nothing other than you in your head thinking that this trade is completely different than another trade and has a better chance of success. And at the end of the day, that's just not the case. And every trade, has the potential to, fail or win, and you don't know which one's going to win and which one's going to fail. And looking back on last year's data, that was something that was a common occurrence, is that I would take a setup, and after a big win streak, I would really hammer some size into it. And if it didn't go the way that I wanted it to, then I would have a propensity to add to that position because I had a greater attachment. And with options trading actively, especially weeklies and closer to the time of expiry, your mistakes are amplified greatly. So looking at that, just summing up what could have been a good year, it was just mistakes that were made repetitively caused an issue, and that was one of those was position sizing, is not having consistent position sizing, and then also not only increasing your size but decreasing your size after a loss. If you go on a losing streak and you take you're normally trading 5 contracts and now you're trading 1 contract, well, it becomes a different ball game because now everything is different and you don't feel the same about the trade. You're probably not going to take profits where you should because you don't think that you've made enough money. And so that is a huge issue that has plagued me for a long time, and it's only just till recently that I've began to rectify that, and it really just boils down to finding that sweet spot of risk that you're comfortable with and doing the same thing day in and day out.
Mm-hmm. Spoken like the words
I wish, man. I'm
master.
nothing even close. Maybe one day.
Yeah, no, you will.
That's right, buddy.
We're all getting there, So one thing I wanted to mention earlier in our call that in the podcast that I kind of brushed over is the guy who reached out to me and was like, "Hey, I gave back all of my month's gains yesterday on CRM."
Oh, I've been there more times than I would like to count, and that's an interesting, it's an interesting point. It's I did, like I said last month, it's so easy to and let me preface this with, especially if you have like another source of income, or you're not or you've had a good month and you're not at risk of blowing the entire month up, these things start to go through your head of, like, let's say you have X amount on the month, and then you're like, okay, I'm in this position, and then it hits my stop, and I'm like, well, if it goes a little bit lower, that's okay. I'm only giving back 25% of the month's gains. Well, if it goes a little bit lower, it could come back. Well, that's okay. This income stream over here can alleviate any pain that this may cause. Well, then you begin to rationalize in this trade, in the trades, and especially if you're on a win streak or you've had a good win streak, you have this ego that's telling you, hey, yeah, I can do this. I can work my way out of this position. I can trade my way out of this loss. Yeah. And all these factors begin to magnify and exponentiate on top of each other. And it becomes super easy. And like I said, I'm no professional trader. I'm still learning, and these are mistakes that I'm making. And I have a passion for communicating the psychological woes that most won't talk about, and I try to do a good job at communicating, these issues, such as that trade that you were referring to. Most of the times, and the issue that you assign to that loss is really not the issue at all. So, for instance, if you took a trade at level X and you said you were going to stop out at level Y, and then you didn't stop out at level Y, and you plug it into a trading journal, or you begin reviewing the trade, and then you look back and you're like, oh man, I didn't manage my risk. That's the mistake. Or, oh man, I didn't cut my loss, or I added to the loser. That's the mistake. Well, that isn't the mistake 9 times out of 10. The mistake is deeper. So you peel back the onion and you look and you say, okay, I didn't cut this where I said I was going to cut this. Well, why did I not cut this? And for instance, something for me that I was running into is whenever I was adding to my losers, I had this preconceived notion that I could build a trading system based on a 90, 95, almost 100% win rate, which is completely insane to even think about. So that belief, as I was working through that, triggered me into not selling and adding and trying to quote unquote work my way out of a position. But when I was labeling this, it was did not manage risk, but really there was something deeper there, right? And for me, going deep beyond what most people would assign as a trading issue that we've all heard, adding to losers, poor risk management, not taking profit, all these things, those are just the surface level issues. And it's taken me a long time to begin to peel back the onion of myself and see what is really taking place in my mind during these moments. And 9 times out of 10, it's not just, oh crap, I didn't want to stop out of this, or oh man, I didn't put a stop loss in when I should have. There's a lot of different factors at play, and that's what I would encourage anybody. If anyone takes away anything from what I have to say, it's really do the introspection. If you want to learn about the market, you have to learn about yourself first, because when you get in and the potential for gain is exponential and the potential for loss is exponential, you start to make decisions, and things that are inside of you that you may not even really think about very often become or bubbling to the surface because of the environment that you're putting yourself in. So a lot of the pain and a lot of the losses and a lot of the drawdowns that I've experienced came from really not understanding myself very well. And last thing I will note on this is one thing that may be surprising is that I found that small risk for me relative to my account size, as I was learning and as I was testing different things, you would think that small risk really wouldn't do much. Small risk relative. Let's say, for instance, 0.25% of equity is a risk per trade, or 0.10%. It's very small comparatively. So I look at that, and I was taking very small risk, and I noticed that I was just losing. I was just my account was just going down and down and down. It wasn't massive swings, but it was just going down. I was like, why? Like, what is going on here? I'm clearly something is at play here that I don't really understand. I understand markets very well, and I've written on Twitter many times that you can be a great market analyst but a very bad trader, and this is a good case in point here. Okay, so you take 0.1% of equity and you risk, and you take a trade at level X and you want to sell at level Y. Okay, well, it hits level X, you take your trade, and it hits level Y, and then you look and you only have one contract to sell, or you're only up $12, and you say, oh man, this is barely even going to cover any fees that I have. I'm not taking this off. And then you hold that position, and then it goes past your stop, and then you say, oh man, I'm only in one contract. I'm only down $12 now. Well, then that goes down to $50, and now you're at half a percent of equity. And then you go back and you journal that, and you say, okay, I didn't sell my target, and I didn't sell my and I didn't stop out. Okay, that's great, but why did you not do those things? And for me, the why was I'm not taking enough risk relative to my account size, so I do not have a motive to take profit for $12, and I don't have a motive to take a loss at $15. So it's taken me a while to peel those back, and that's just one example of going through something that a common mistake of not selling your target or not stopping out, and that's not the issue. The issue may be that you have a lot of money or you have an additional income stream, and you think to yourself subconsciously, well, it's $15. Well, I'm making $40 an hour at my job, or it's $5 a loss and I'm making $15 an hour at my job. Well, I can make that back in 25 minutes or whatever it may be, and then you make these bad decisions. So that's something that if you get anything from me on this podcast or this discussion is to really dive deep in yourself and peel back the layers to analyze those issues that you're just labeling as a surface level label that you may have read in a book or on Twitter or something, because most of the time there's going to be something deeper there.
Absolutely, brother. I love that. I was listening to you and I was like, man, this guy's speaking my language. He knows me very well. He knows me too well. I think what it really definitely boils down to is just the ego and shortcuts, right? And not being disciplined. I would say those are the three big culprits to like the biggest, setbacks and things that are going to hold you back as far as becoming like the next level pro trader. It's shortcuts, because what are shortcuts? Shortcuts never work. I always take up too big of a position in a trade, and then I end up, losing because I'm trying to take shortcuts. I want to get rich quick. Another big thing is the ego. So when you're on a big win streak, you just get cocky. You're like, I can't lose. I'm God.
Oh, sorry. Go ahead.
And then, the third thing is discipline. It's just the only way you guys are going to make trading work long term, like day after day, year after year, is if you can be disciplined to following the trading rules. And the trading rules are every trade you take should only be around, 2% your total portfolio. Okay, so that's kind of a good rule to live by. Granted, if you're just starting out and you have a small account, you're going to want to, you're going to have to take on a little bit more risk because your account's small. So 2% of $5,000 is not enough to even buy one contract of like SPY or something, right? So you're going to have to increase that to around 10% or so. But yeah, like typically, 2%, 3% is a good risk management. And when you're in a trade, you need to always keep that same position size, whether it's 500, 1,000, 2,000, every single trade. I don't care how many days you're up, how many days you're down.
Yeah.
That's the only way to get the consistency and results. So yeah, discipline, follow and draw lines. And today we trade.
I'll add to that.
Go ahead.
The discipline aspect, or two things here. Discipline is something that I've struggled with for a long time in trading, and it was always confusing to me because I was disciplined in other aspects of my life, and discipline is an interesting thing because it's like telling someone to concentrate. It's like you tell someone to concentrate or focus, but how do you teach someone to focus? How do you teach someone discipline? I was always confused by this question of I knew I had to be disciplined, but I was not being disciplined. I was just blowing up my account, and it was you would think that if something is causing you pain, you would be disciplined enough to not do that thing, such as just taking the cliche example of putting your hand on a stove eye. It's like it doesn't take a lot of discipline to not do something that's causing you pain. Yet as traders, month after month, year after year, we expose ourselves to this pain, and then we continue to tell ourselves we need to be more disciplined. And one of the things that I've recently discovered, and again, it's taking a ton of hours of work, is because I was very, very confused of why I could not be disciplined. Well, the reason being for me, and I encourage if you are having a similar issue with discipline, is to analyze, and this was huge for me, is analyze a why. Why are you? What is your why in trading? So for me, I'm a religious person, and there's a verse in Luke called in Luke 12:48. It says, brother. For unto whomsoever much is given of him shall be much required. So that is my why, and I have this opportunity, and for that, in that, it says, whomsoever much is given, I'm given this opportunity, much is required. I'm not required not to squander this opportunity. And by not being disciplined, I'm squandering this opportunity. So now it's easier for me. I have a sticky note here with that verse, and I look at that, and I'm like, okay, I can make a good decision here. I can do the right thing. I can be disciplined because I have this this motivation to do so. Before, you don't really have a motivation. You say that you don't want to lose money, but it's not enough, or you would stop trading altogether. So for me, having that why, and for you, if you're not religious, it could be your children, it could be, a dream, it could be something. I definitely do think it doesn't necessarily need to be monetary, because that is kind of in my head is counterproductive. But having some kind of why, it will help you, if you are struggling with discipline, will help you be more disciplined. And the last thing I'll say on this is everyone has to find their rhythm. So I'm going to draw a golf analogy here. Whenever you look at something and you look at the perfect swing, every professional golfer has a different swing. They have a different tempo. They have a different style. They hit the ball differently. They choose different clubs. So what might be right for you might be wrong for someone else. What you see as discipline might seem someone else as undisciplined. What you see as a good idea, or what you see as a good risk, is a bad risk and a very unwise decision for someone else. So when you combine these things together and you look at the whole, the three things here, peeling back the layer of the onion and really analyzing your mistakes, and then number two is having a why that isn't monetary linked, that allows you to be more disciplined, and then always remembering that it's choosing your swing. You're going to swing the club, the proverbial club being your drawing the parallel to golfing, but your trading style is going to be different. So you might only want to risk 0.1%, or you might want to risk 20%, but you have to go through that process and that development, because no one can do that for you. And I think that's something, and like I said, I'm just now starting to develop all these frameworks, these mental frameworks, and these discoveries out of years and years of pain. Like I said, I'm nowhere close to where I want to be. But over the past few months and year, these discoveries have helped me more than any technical analysis book or any type of system that I've ever looked at. Simple introspection and simple designation of your why, which should be greater than, like I said, a monetary value. It's really made a tremendous impact on me, not only in my trading and being able to start to turn things around, but also, personally. It helps me in my personal life. I'm not as attached to my trades. I'm able to disconnect from the markets. I'm able to lead a better life. And for that, I'm forever grateful for trading, because it's helped me become a better person. But I wouldn't have been this way, or I wouldn't have discovered these things, had I not went through such, horrendous pain and losses and anguish through trading and what it exposed me to.
Wow, man, that's awesome. That's awesome, Davis. If you guys are listening and taking notes, I hope he's got you thinking, because he's got me thinking a lot right now. And you actually really inspired me, Davis, to kind of, as you were talking and as I was processing and taking on what you're saying, it made me realize, guys, it might be a lot to at the idea of having to be perfect. Because when you're disciplined, you have to be disciplined with your entries, you have to be disciplined with your exits. You have to be disciplined with your position sizing, which also, translates to risk management. And you have to be perfect, and you have to do it right every single day without fail. Now, it seems like a lot. It seems like a tall order, but you'd be surprised, to be perfect every day, and build these disciplines and these disciplines. It takes a lot out of you when you're doing it in the beginning. But if you can consistently do it over, a set period of time, they are no longer really that hard to do. They become effortless. They become just waking up, putting your shoes on, brushing your teeth, right? You've created these winning habits, you've created this winning strategy, winning formula, winning rule set, winning psychology into a habit. And that's what you're working towards. Then you wake up and it's just You don't have to think twice about it. You know exactly how many contracts you're going to buy. You know exactly where to buy. You know exactly where to set your stop loss, and you know exactly where to sell. And you just do it every single day for as long as you. The more days you can do it and follow the rules, it's like a snowball effect. It's like the little snowball as it's rolling down the hill, it gets bigger and bigger and bigger, and at some point it gets so big you can't stop it. You know what I mean? But you can stop a little snowball with your foot.
Absolutely, man. And I want to, I know we're getting close to the end here. I want to wrap up the things that I've said into kind of one example that way may be tangible for people.
Absolutely.
So I want to use something because it was always a pet peeve of mine that people would use examples or bring charts up or do different things from like 5 years ago or 10 years ago or whatever. So I want to discuss, the things that I've said today, like peeling back the onion, staying disciplined with your why, and really understanding yourself and your trading and finding your rhythm and your swing, which takes, it definitely takes time. I mean, it's taken me 4 years, and I'm still, developing, and I'm sharing with you basically. And it's what I love to do is to not really talk so much about technicals, but to talk about 4 years of true introspection and like hundreds of moleskins journaled in and ran through. And today's a great example. So as I mentioned last month, in February, I had the best 2 weeks that I've had, and then I ended the month marginally green because the last 2 months last 2 weeks, just gave back all those gains. And, I had to go back and I had to assess and, what was going on. And I still go through that same process of asking myself, what is going on in this moment? Not the simple like, oh, you didn't manage your risk, or, oh, you didn't take profits, but why did I not do that? So I went through that process, and, there was a few things in my personal life that was going on. And there's also some things that, in trading, I was on a very long win streak. I was making good money, and then my ego started to get and interfere with my trading. But what did I just mention about the why? My why is for unto whomsoever much is given, of him much shall be required. Well, ego would not be a productive thing for that why. So today I go in. I've had 2 great days. And I had the tendency last month to have really good days, and then I wanted to hammer it, and then I would give back, a decent amount of money. And most people would just say that was, it's poor risk management. Well, it's more than that. So today, for instance, the market popped up and it sold off, and I was short in the morning. I'd made some good money, and then I tried to buy the dip a little early, and instead of adding and instead of making the same mistakes that I made in February, I did what was right. I made the good decision. I took my full size, I set my stop, and I moved on, and I got stopped out. I took my full size, I set my stop, and I got stopped out. So I ended the day basically break even after being up nice in the morning. And that is completely different than what happened last month, the last 2 weeks of the month. I would have continued to add. I would have continued to let my ego allow itself to take over and to make bad decisions. So through peeling back the onion, even just this is a process I still go through, peeling back the onion and looking at the mistakes that I made last month and seeing where I went wrong, I was able to rectify those. And one of the things that I have on my desk is don't make the same mistake twice. So I'm focused on the couple mistakes that I made last month and making sure that I don't make those same mistakes this month. So through that process of really understanding myself and then remembering my why and understanding that I am required to do certain things because I've been given an opportunity. And by adding to a loser and getting up 5 times my size because I think that I'm just winning and can't lose, that is not a responsible decision to make. And then finding my rhythm and finding my swing is something that I've been able to regain after a losing streak, and I have that flow with the market, and I can start to move in and out dynamically instead of static, right? So a lot of people tell you, it's X, Y, and Z, and that's it. Well, having that flow combined with understanding your why and having the introspective results through your journaling and your process that you've went through allowed me to end the day basically break even, just slightly down, versus the massive losses I was taking in the last 2 weeks of February that gave back my gains. So that's how I was hoping to use this example and hoping to hit home those 3 points, because for me, you can go learn about technicals or the market everywhere else, but these are my pragmatic results and analysis of myself, and sharing the psychology of this. I hope that you can gain something from that, and if you don't even gain anything from what I've said, that it maybe will inspire you to, instead of looking to do more market analysis, look to do more self-analysis.
Absolutely, Davis. That's amazing, brother. What a fantastic podcast. I haven't, in all of the episodes I've had so far, we have not touched on anything this deep in psychology. So really, thank you. Thank you so much for your time. And if you could say, if you could, say one thing to the audience who's listening before we go, what would you like that to be?
I think for the most beneficial thing for me, I'll say it this way, the most beneficial thing for me about trading in life is really, really, really diving in and figuring out your why. Without that, you're just going to be walking aimlessly through your day-to-day life. You're going to be trading without reason. So coming up with your why and allowing that to guide you in your decision-making process, because from that originates good decisions, and from that allows you to understand where your bad decisions are coming from. So understanding your why and spending time thinking about that, not just cursory glance saying, oh, this is it because it's cliche and everyone else says it, but really diving in and understanding your why, and then allowing that to guide your self-analysis and your market analysis.
That's amazing. Yeah, I saw you follow that Jocko Willink guy. He's awesome, right?
Absolutely.
I saw you follow him.
Absolutely.
He's the man. He's all about.
He is. He's
discipline.
Inspiring to me, man.
He's super inspiring guy. So where can our audience, our listeners, where can they find you online?
Yeah.
Where can they follow you?
I just have Twitter at DavisTrades. I don't have any service or anything like that. I started Twitter just to have a community of people to talk about, and I've kind of used it as a platform to talk about psychology, share my losses, and I do share a few charts and different things. But at DavisTrades on Twitter.
Nice. Yeah, and it's funny that trading is a very lonely job, right? Because you don't really interact with anybody.
Absolutely.
So it's nice to have that community aspect. And Davis, thank you so much for your time, brother. And after we get off here, we'll exchange contact info. So next time I'm in Knoxville or you're in Nashville, we'll have to definitely get together and maybe have
absolutely, buddy,
for some dinner. Bring your wife. I have my fiance will come out. The girls can talk about whatever they talk about.
Absolutely, buddy. I really appreciate it, and I hope you have a great evening.
Thank you.
Bye-bye.
You as well.